What can it do to the loan book of banks? I mean, we were talking about the loan book, right?
Right. So we have looked at part of the exposures of the banks, mainly focusing on credit risk and on market risks. Now, you know, if you asked what are some of the findings, 60% of the banks don't have a climate stress test framework in place. So there's lots of work to be done. Of those that do, 63 don't analyze both what I just said, physical risk and transition risk. And of course, you want banks to look at both these drivers of risk. 20%, only 20% of the banks actually take climate risk variables into account when they grant loans. So there is a lot still to be done. Also, you want banks to base their decisions and their models as much as possible on actual data from their clients. Mm-hmm. Now, what we see is that banks, you know, by and large, still use proxies. Now, proxies are a good first step if you don't have any data, but it cannot be the end game. The end game is much more intrusive engagement with their clients, understanding clients' transition plans, and getting data from their clients that they can use.
But what does it mean ultimately for profitability for the banks? Because clearly it sounds like an extra layer of costs and perhaps also for clients.
Well, we didn't focus on profitability here. We are looking from a risk angle. But of course, it's sound banking to manage your material risks. And there's no doubt that climate-related risks are material. That's not just a finding of this exercise we are talking about right now, but also of a self-assessment exercise that we asked the banks to do last year, in which banks, by and large, came to the conclusion that indeed climate-related risks are material for them. And that maybe is also good to understand that this is, although a pioneering, innovative learning exercise, it's part of something broader. So 2 years ago already we published supervisory expectations. Last year we asked the banks to do these self-assessments. We asked the banks, all of them, to do action plans. This year we do the climate stress test, but also a more general thematic review, deep dives on commercial real estate. So there is a whole range of activities on site, and then we bring it all into what we call our yearly SREP cycle, in which we give back to the banks where we think there is risk that they need to mitigate.